Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Non-farms payroll. Need I say more? Need I say more? I have a camera here I'm testing and I'm looking at it. But when I look at it, it's like my eyes are like way up here. Okay, hey. Let's go to the charts. Okay, so the S&P 500, relatively constrained yesterday, but on the upside, there was some points here where it was like, wowzer, but it came back, right? So, Treasury market up pretty big yesterday, and I was really confused about what was going on because I'm like, well, the London Central Bank, Bank of England rather, they're raising interest rates faster than everybody else. But what I didn't realize was that they all expected them to raise yesterday and they didn't. So that was a little bit of a surprise to them, and that is why the treasuries came up so aggressively. So that is information behind it, but we've got non-farms, which could just completely cancel that out, right? So got to keep that in mind. Oil took a big rise and then it dumped, which I'm surprised, but we had OPEC and that's what was due to the volatility around there. So I'm not sure what came out in OPEC because it was as expected that suppressed price a little bit, but hey, maybe it was just somebody taking profits or something. I don't know. Natural gas, just kind of in a range. Gold and silver recovering yesterday quite strongly. Gold back up into the 1800 range. Copper's still kind of, on the downside, but it says, I don't know, that kind of looks like well, you can't really do it with meta orders on this because, there's a lot of macro factors going on here, but, this was China stepping in and it's still just kind of not doing anything all that interesting. And we should come over here and look at the currencies. You can see here the dollar index yesterday took a pretty massive rise, and we're not just above 94, but into the almost 94.5 area. Bitcoin, on the other hand, while, there was some reaction to the central bank and many other things, we're a little bit lower in Bitcoin, but it's in the 60s, so I don't think that anybody over in the Bitcoin space cares about that movement. So YouTube Finance is doing a dab. Wait, there's the dab emoji? What? Okay. All right, so coming back over here, let's turn on the financial juice. We've got about 2 minutes, and we're looking for 450,000. I believe. Oh, I want to YOLO this. Okay, I'll tell you what. We'll do Sim. We'll definitely do Sim. I want to be short Treasury. They're saying 450, and Goldman estimate, who I tend to favor, says 550. So that's basically where we're at. Let's move some things around here. Kids have been playing games on my computer at the night, and they just totally mess everything up. See, why do you move the monitor? You think 375? Really? I want to know how you get that number. Well, we got a little bit of time here. Oh, is that what happened there? Yeah, okay, let's fix that. last time around, remember, there was an anticipated rise in employment from teachers that didn't happen. And that was why the number was so low. Now, there could be a similar seasonal problem this time around, but otherwise, I do think it's going to be higher than anticipated because all of the other numbers have been rising. So 550. Obviously, here in the micros, it wouldn't make much sense for me to try and click in, but I don't know. Every once in a while, we get lucky and they give us an opportunity. You'll miss the first 10 minutes, but you're expecting to. Yeah. I mean, if it came out and it was 550, I think that could probably lead to some solid action that persists. Right. Now, I should know I am going to end a little early today because I got to go watch the kid. Also, we should remember the average hourly earnings month over month. I think they're looking for a reading of spot 4 on that one. Oh my. Okay, so it was higher. It was 531. Market's not actually reacting to that quite how I would have thought. Hourly earnings is in line. What about the unemployment rate? $4.6 versus an expected $4.7. So the unemployment rate decreased as well. It was just a sim order that I had prior, but I don't know. With the number of times that I've done this recently and I've been right, I'm starting to feel like it's not as ballsy as I previously thought. ES is doing it strange. It is. It's a little interesting that I mean, now the Treasury is going, but I find it odd that they waited as long as they did to start making their move. I wonder what it was that they were kind of eyeing there that they wanted to wait on. I wish that I had 2 contracts on in the ZN because could be averaging out some of the profits here and then really just let it run all day. But yes, it's doing something strange. It looks like other than going up and down. No, I agree. It's a little weird. The ES hasn't really moved yet. I think that the problem you might have here is that this is very hawkish for treasuries, in my opinion, because we had such a huge rise up yesterday, and now we're going to have to get a huge sell meta order going the other way, and so rates probably come back up to 1.6 is my guess. 1.6, and at that point, what do the equities do? Right? They have to sort out, is this good enough to outweigh the negative effects of the rising interest rates? And I think eventually they will rise up, but that's probably why they're being a little bit hesitant, right? Oh, looks like they're moving now, huh? And I can see the 6J and gold just getting dashed. Oh man, for the guys in oil, this is probably a really ugly move for them, huh? Okay, there are some revisions to priors I'm hearing here too, but they sound like they're good. that also might be why they waited a little bit, was because the October number was so different from what was expected that maybe they said, you know what I mean? Maybe they decided, well, we need to, the prior revisions matter more because of that, because it was so bad last time around. The season also needs more workers. Yeah, there's some seasonal, like if this report had been bad, I bet you that we'd be blaming it on seasonals, right? Is this all-time high stuff? I think so. Yeah, I think so. I don't know. The S&P 500 has made a decent enough move for now. I don't know if it makes sense to try and take this spot or not. Right now, you can see in the treasuries that they're kind of feeling the liquidity effects, right? Acing trades earlier. There you go. Yeah, so look, I got buried a little bit. Well, I was thinking that they would come back up for me, but not like that. It's a little, I don't know. I should have waited on that second contract. It's okay. Well, I said I'm not sure if right here makes sense, but that was in 91 and now we're 95, so yeah. I guess a Bank of England speaker is talking right now too. I mean, it's an increase of about 100 over the forecast. When there was some concerns about employment from the last report. So could it trend all day? Is certainly a situation where I think that the information could justify it trending all day. I don't know, guys. I'm kind of taking on a big risk here. They must be moving because of the Bank of England here still, because Bank of England's pill is speaking. Let's clear the trades in here. Peter Grandich, if you're scratching your head on the employment revisions from the BLS this morning, let me show you their employment test given all those who do the monthly employment calculations. Well, or should note, there were some revisions, but they were generally positive. Oh boy. Squeezing both shorts and longs, it sure feels like it, doesn't it? I mean, there's reasons for it to be happening, right? It's just a lot of it is just liquidity, but it might take them a little while to sort it out, right? Overpriced tablet on an exercise bike company is down 32% this morning. Peloton, holy crap. Well, everybody said that one was going to come back, right? Well, something that you might have to keep in mind in this kind of situation, if you really want to play this, and I obviously did not play it very well in the micros, right? Is that you're going to have to give it more room to breathe because we're still in a low liquidity environment. It's going to slide around a lot here. Okay. So I'm trying to sort out which one is going to lead here, because part of the movement here in treasuries could be due to the spreads, and I would think that this kind of news would be positive for the inflationary case and therefore create some steepening in the curve. As of right now, I would say that it's a little too close to really judge too much on, but it did flatten slightly. So but if that is what we're seeing, we should expect to see the 30-year start leading the way down. Hello, AO, how are you? It's been a few days, yeah? I need to start keeping a little spreadsheet. We need to start taking attendance. My method to trade U.S. Treasuries gets messed up during non-farms payrolls, and it got burned for 2 consecutive months. No thanks, slow it out. Yeah. Well, you know what? I have taken them in times, even in micros. I think in this particular case, I made a misread because I thought that 575 was like really really cheap, relatively speaking, and it turned out that 575 is like equal to 040 in the 10-year. It was like, crap. Okay. Oh, you're back at work? I gotcha. You're the reason why these numbers are so good this month. That's what it is, AO. AO got a job and he's responsible for 100,000, he's the equivalent of 100,000 people. The government have to count him that many times. Not because of his weight or anything, but because of the size of his brain is. Okay, so we did see it drop back down. Some slight steepening in the 2s and 10s, but not on the 30-year end of the curve. 30 is the one that we would really want to see the rates rise on. So they generally all came down slight flattener, by a tick of flattener. One of the things that I'm seeing in this news report, and what I'm going to tell you is very kind of qualitative and speculative, but I've noticed that when there is like nuance in the report, that the public is not able to read it, and so you get kind of interesting stuff. Like there's been situations where the report really wasn't that bad, but the headline numbers are all bad, and so when the retail crowd comes in, they sell it, right? Or they buy it or whatever the deal is. But I don't think that that's the case this time. Like all of the headline numbers and the unemployment rate fell too when they didn't expect. In fact, I think that some expected the employment rate to rise just a tad. So that's really good, right? That I think would lend itself towards trending when the S&P 500 opens. Okay, so I am starting to see something that looks like a sell program in the 10-year. I'm going to reset it right there. I'm Now that's interesting. Do you see how I have an order up there at 582? But it's still 215 contracts at each spot. So it's like the robot has been told to hold at least 215 at each price. I wonder if I were to cancel my order, if it would add another one or not. Okay, so somebody, I'm surprised that they were able to get 3,500 to buy into them at market right there. We probably need to remember that though, because for starters, that means there is a little bit of a hole at 05 perhaps forming. Yeah, see, like 230 on offer after that isn't the most positive sign. So we'll note that particular price, but also there is somebody that seems to want to fight it. Well, it could be profit taking, I suppose. See, so like I can see here, Yahoo, U.S. payrolls grew by 531,000 as unemployment rate fell to 4.6. Like, the media outlets are all going to look at this and be like, oh yeah, the jobs numbers were great. Well, that came one tick away from your stop. Well, look, there's a little bit of a hole at 7.5, I think. There's a big order there at 7.5 too. Okay, News Squawk putting out their commentary and reaction as the dust settled. The Dixie rose to a year-to-date high at 94.634 before settling just north of 94.5. The Treasury notes are little changed, 131.07 after seeing some initial choppy action. The S&P have sustained mild gains from 46.90 up through 46.85, although note the greater gains in the real economy levered Russell 2000. There was little change in the U.S. rate hike pricing, with the December 22 euro-dollar futures remaining unchanged at 99.2, indicating more than 2/4 of a point basis hikes being priced in by the end of the year. Still, a nice above consensus rise in the headline with upward revisions to the prior adding weight, echoing the ISM manufacturing. We saw a decent rise in manufacturing jobs, 60K too, a sector that has previously struggled to recover. A positive step for the inflation outlook after the AHE MORM, I don't know what that means, dipped to spot 4 from spot 6. Slack measures saw increased incremental improvement, with the unemployment rate ticking lower to 4.6, although the participant rate stays steady at 61.6, while the popular Fed gauge of employment population ratio rose further to 58.8, still away from the pandemic at 61.1. But progress to the right direction from the broader policy outlook, a strong report that emboldens the Fed's decision to begin tapering, but not extreme enough to raise questions about altering the taper pace. Note that Powell said Wednesday he sees maximum employment being reached by next year. You caught some of that, Ace? Good. Good. On the treasuries here, I can kind of identify some spots where it's like maybe it's safe and maybe it's not. It's so much harder for me to do that in the S&P 500 on these kinds of moves. So when he's sitting there like trying to take a trade into this momentum, I'm like, I don't know. I hope it works out. He usually does. I shouldn't doubt him. So I'm still kind of watching for a hole here at 05. And we are getting some indications that it's there. I think the issue is in this kind of a situation, somebody could just decide to push it out anyways. But retail learns first lesson not to go long into a bad sell-off after earnings, right? Well, look at, you want... I think the better example of this is Zillow right now, right? So if you look at Zillow, they're down basically like what, 50% year to date? Now, some of what's going on now, we kind of knew was coming. But what you're getting now is the headline, right? So remember, what matters? Orders matter. So even though maybe they've been trying to price in that their housing unit thing hasn't been going so well in Zillow, it's in the headlines. Like you go on TikTok, and that's one of the most talked about stocks, right? You don't necessarily want to be catching the knife in something when everybody's shit talking it, right? There could be a case where it makes sense that they will come back because the core business is still there. And maybe they can try something in the future. And like, just, I think the thing that bothers me about it is that they went whole hog on it. They didn't go like, okay, well, let's just try, this year we'll only do X thousand homes and we'll see how effective our algorithm. No, they just went like full bore on it and lost millions of dollars. That was like way so risky for them to do, right? But when everybody's talking about it, it's going to cause people to sell it, right? And it's going to be the same with Peloton, right? The idea that orders is more important than price is life-changing, right? It's really like all of the oddities in markets, all of the great contradictions that you always see people on the internet arguing about are reconciled once you understand that orders move price and that predicting orders is what you need to be predicting. And anything that causes people to buy or sell, that's gonna have a significant effect. It's funny, Zillow just bought my buddy's dad's house for like $60K more than he was asking. Oh man, wow. Well, here's what I want to know. There was a lot of people on TikTok, and they were saying that they're trying to squeeze the market, that they'll buy all of these houses and then to raise them up, and then they'll sell one at a higher price so that all of the other houses get a higher comp then at that point. They're saying that's what they were intending to do. But I'm sitting here thinking about it, and I'm like, okay, but how do you use an algorithm? How do you use a machine learning algorithm to come up with that sort of a thing? That doesn't sound like a trade that the machine learning algorithm came up with, right? And now it's kind of like that's not what they were. Even though that happens, surely, I don't think that was their intention. It looks to me like that the algorithm just was buying up. And I think that probably what happened was that the Zillow algorithm, when looking through historical price data, this was an unusual situation, right? Like the retail market went nutso because of the crazy low interest rates that were happening, and so many people were just desperate to try and get into a house because they were like, this is going to be my only chance, right? And the Zillow algorithm couldn't compensate for that. But the thing is that if you're coming in and you're saying, I'm only going to buy the house for what it's worth, then maybe they wouldn't have had that, right? Don't tell the algorithm to chase. But you want to, if you're going to do that sort of a thing, it should be arbitrage based. And it doesn't sound like that's what they were doing. They probably used 6 months of data. I'm sure that they went through like all of the historical price data that they had, but it's just like, if you're trying to use that to predict future prices in some way, it's going to be wrong because it's just such an unprecedented situation. The algorithm can't necessarily determine that, right? The thing is there was some other, I forget the name of the stocks, but there are like 2 other guys out there trying to do this. And one of them has been talking shit, like that they think they got it all figured out. And some people think that their earnings in a week or two is going to be really good. I wish I could remember the name of the stock because it's not something that I would be willing to bet my money on, but it is something that I'm going to be watching because this company, they were pricing the company at basically equal to the next year's earnings. And here they're bragging about that they did way better than Zillow, or that they made money at Zillow's expense. And if that's the case and those earnings came out good, that stock is gonna skyrocket. Could skyrocket. Should be much less certain in my words, right? Okay, well, the E-mini did kind of fall back into a pocket, just like the Treasuries did. But since then, we've been getting a slow and steady trend. We're still not to the top of the hour, so there's plenty of time for them to get going, because you're typically going to see the large meta order and then going to wait for like 45 minutes. So we may chill here for a little bit longer. And even though I would say that at this point we have to discount that there was at least some degree of a hole at 05, it doesn't look like it's so strong that they couldn't dig out and continue down in the 10-year. But the bigger question here is still going to be the yield curve. Will we see selling in the 30-year? Because at the moment, the yield curve has not moved all of that strongly. If anything, it flattened, which I feel that this data is supportive of inflation, reflation, not inflation, but a reflation, and that longer term yields have justification to move up. Okay, so they're doing this again. So something I'm noticing is that they'll come down and start attacking 04.5, but then if they don't clear it, it backs up 2 ticks all at once. What's Hu Shixin saying here? No matter how many warships and warplanes the U.S. have, they cannot be fully transformed into combat capacity at the Taiwan Straits. For achieving reunification, China is determined to establish overwhelming military capability to defeat external military intervention in the Straits. I wouldn't be so sure about that one. Okay. They're really trying to make the case that it's not worth it, the US, just let us do it. That's what I think that the Chinese have been trying to say. Okay, we fell back into at 05. I don't know, somebody's trying really hard right here. And China just needs to grab its nuts and do it already. So they're really leaning on 04.5, but I'm not seeing them lean on the other side so much. It's like it goes, yep, falls back, yep, falls back, and I'm not really seeing them aggressively hold it back on the other side. Way and stop Russia with Ukraine. Yeah, I wouldn't. I don't know if that's really very comparable, because for one, we had a pussy president at the time. No offense, Obama. But second of all, I don't think that the U.S. really had very very strongly invested interests in Ukraine. It just kind of came out of nowhere. All of a sudden, we were supposed to care about Ukraine, or Georgia. Georgia was probably worse, right? All of a sudden, we were supposed to care about Georgia. A good idea for video would be a tour of websites you use. What websites do I use aside from Financial Juice and TweetDeck? Maybe the CME website. I actually did make a TikTok like that one time. If orders move the market, why should you try to look for them outside of the order book? Problem 1, by the time you know the order has already been executed. 2, could be another order on the other side. Okay, so yeah, I think that the thing is you want to watch the order book because you want to get a feel for what the flow is actually doing, right? Because you're going to have a theory, but you need to see actual data reinforcing your theories, right? I don't think that means that you need to see every order out in the market, but you need to be seeing the orders in a significant enough of a place to verify what's going on. So I think that what you can see here, especially in the treasuries, because informed trading tends to originate in the futures for the treasuries. I think that you're watching the order flow in the 10-year is generally going to be sufficient. You know, there's all this talk about things like, well, what about you can trade it in over the counter or in a black pool or those sorts of things. And the thing you got to remember is that OTC or a black pool is not some silver bullet for large institutions. Otherwise, they would only use that, and these markets wouldn't exist anymore, right? Those orders are still going to have impact because there's still market makers over there. They're going to have to hedge and all that sort of a thing. So as long as we're getting some data to show us what the flows are generally doing at the time, we should be good. Yeah, they're just dancing back and forth there between 0.45 and 0.65 quite easily. Last minute House Democrat plan bumps state and local tax cap to $80,000 through 2030, says a Twitter source. Good morning, Dennis. It's morning for us. By outside of the order book, I mean knowing hedge fund and wanting to execute. Well, I mean, again, you want to know the order flow is going to come before it comes, right? So I think that a lot of these scenarios in people's heads come from the idea that I'm going to see the order flow and that aberration is going to give me a predictive signal that tells me I can go long or short here. But I'm saying, when you see the order, like the trade is over, is already passed, because you want to predict the order flow. You don't want to chase the order flow. It's not impossible. For instance, there are people right now, this very moment, that are still waking up and are getting ready to day trade and are looking at what is moving pre-market and deciding where they are going to place their money on the open. There is going to be money deployed in 20 minutes in the S&P 500. And there is data and information that we can use to predict where they're going to deploy that money. That would be a great example. Can you predict order flow? Sometimes, yes. Well, I would assume that they're going to buy it, right? I don't know if this is going to trend all day, but we'll see. I'm wondering, is there something about that price that That really isn't. This kind of, I mean, there's yesterday's, well, not yesterday, but the day before's highs. Hmm. Yeah, what was I was looking at why 050 other than just that there's a liquidity hole there. But more broadly, well, I don't know. Like the thing is that the flows have been mostly selling the Treasury. It's just that for some reason that price is holding. You can see here that the 30-year is like up on its highs. Like what? Perhaps somebody is making the bet that the non-farms is not that important. But I don't know. We are getting the flow. Like that's the thing is we are getting the selling flow. So can you explain how much the futures price can affect the spot or vice versa? Like which one leads the other or how fast is the arbitrage between them? Well, yeah. So the arbitrage between them is like practically instant. I mean, it depends on the market, but like when we're looking at the difference between the Treasury futures market and the Treasury cash market, or the difference between the S&P 500 index and the futures, it's pretty difficult to make money on arbitraging the differences there. But there have been some studies that suggest in the Treasury market that price origination on informed trading tends to happen in the Treasury futures first. Does it matter? I don't know how much it matters, but I mean, this is where the data is, right? I mean, I guess if the question is, should I be spending tons of money to pay for other data outside of the CME? Probably not. Unless you want to do something complicated with options and you need options data. You want it to come up to 23, huh? Might happen. So watching the flow here right now, I am noticing that it kind of feels like the market making is taken over again and that they're just kind of letting it come up because I'm not seeing the volume that we did before. If you're profitable, you're going to move to futures options. Okay, that move up right there was more. That was outside of the range in the 10-year. There's 23. Oh, not quite. Not quite. There you go. That probably wasn't enough to fill you. There's a reason why HFTs exist, yeah, but that doesn't necessarily mean that you will be able to make that trade, right? Still not quite there. Did you get filled, Uzi? Would have been close. Oh. Maybe they're gonna do it anyways. There you go. Now you definitely got filled. Well, I made the wrong call. That's very disappointing because I really thought that we had a good trade there. I mean, I was willing to risk a lot on it because I thought that we had such a good setup. But I think that what I was missing here is that they don't think that the good non-farms number is enough to change the pace of the taper. That's what I think they're betting on here. I'm kind of tempted to try and flip back around now, but I should probably sit on my hands for a little bit. And or maybe just about be like, okay, I took my licks and be done. That's one I gotta get out of too, huh? I should have, I don't know. I really should have, when we were like at break even and I was seeing all of that, I was like, well, that's a lot more pushback than I would have expected, you know? Really should have been thinking about getting out, right? I was a little bit too hyper focused on the trade, on what I thought was going to happen. Because the order flow was telling me that there was a problem with the thesis. So that's to 5. That's another 2 basis points down. That's actually a little crazy. And is it flattening? It is still flattening a little bit now here. Well, on that last move, now it flattened. Well, I mean, they moved the way that they moved, but I'm not entirely sure that this is really in line with the macroeconomic fundamentals. There is some pushback at 12 now. I feel like I'm trying to save face here, right? But there's no reason for me to do that. This is just a loser. No fundamentals, just stop runs? Maybe. Here's the thing. There wasn't really market orders on that, right? See, like this move up, just when you look at it, it didn't move up because people were stopping out. Where in fact, speaking in the squawk. Okay, so when I'm looking at it, I'm not really seeing the sell volume having come into the 10-year. But I do see the 6J having moved. So it appears that the 6J is really the originator of the flow in this case. I'm not seeing people in the Treasury like hardcore stop out though. I mean, that could mean that they are going to move up further. I mean, because there probably are more stops to be had if this one wants to continue. But if it's really moving off of the 6J, now the other side of it is that gold has recovered as well. I don't know. Thing is, like it's a Friday and you get all those kinds of weird currency flows that I'm not really able to predict. So if it really is a 6J, I don't really have a good thumb on whether that will continue or not. I can see that the book is starting to have a little bit of trouble here in the 10-year. Yeah, you can kind of see that they're... I wouldn't surprise me if they pulled back all the way to 09. Because that was the last place that there was a little bit of iffiness, right? But we could still see a change when that... Well, I don't know. It's usually when the treasuries do this, they're not going to like pivot again. But we do tend to see a change when the S&P 500 opens, right? Who goes high at an all-time high? Why does it matter that it's an all-time high? What makes you think that it being an all-time high makes any difference to whether it's a good buy or to sell? I don't know. It just seems risky. If you know that orders are going to come, it's not risky. If you watch any price indicators, not really. No, I mean, I watched price on the order book. Any other indicator that I'm going to get is just going to be a derivative of the order book. That if I understand the indicator well enough and really pay attention, I can probably predict what it's going to be, right? Like R squared is a really great one to show you autocorrelation, and when we come in here in the S&P 500, we're going to see there was a decent amount of autocorrelation after that news. Well, the thing is I haven't seen the volume, right? Well, it's starting to come out now. I should have said like 5 minutes ago when we were breaking the highs, I wasn't seeing the volume. I got out before their volume really came, right? Because did I get out at like 0.55? Yep, 155. So I saved myself quite a bit there. I could have turned around and sold it and probably done okay. So by the way, when this started, I was thinking, well, is it because of the Fed speakers and stuff? Well, the Fed's Georgia's speaking right now. It doesn't seem like they care. And when you kind of start looking at so we're like above yesterday's high even. Is there a simple way to calculate between instruments? What do you mean by that? Well, there's the spread indicators that we've got, right? You know, another thing that I'm just thinking about right now is this is now like the third or fourth non-farms report in a row now where the Treasury doesn't seem to do what the report suggests it should. Mm-hmm. 15.5. There's quite a bit of change there, so they look pretty excited about it. Now 3.5. Like if I turned around, I would have made more. Way too hard for me to jump on. Is it the case that I just can't get myself to go short rates? So look at this. So that might be enough right there for them to turn back. Too slow. See now that was a stop run. And a quite a silly one too, I would add. They flattened the 2s and 10s. They really flattened. Like somebody is really making a really bizarre bearish bet on the economy here. Predictable. Well, I wanted to be long down in there, you could see, but I wasn't getting the price that I wanted. Look at that. They're gonna thrash around a ton here, huh? President Biden tweets over 5.6 million jobs created under 5% employment. This is a significant improvement from when I took office and a sign that we are on the right track. Do market makers contribute to those stop runs? Like, do they influence price by thinning out order books? Well, yeah, I mean, to some extent, because honestly, if we've had a move up from it was 08 all the way up to 17, do you want to be the person getting the fills on the offer? Or do you want to be taking on short inventory on that? Right? Like, it was like the point at which I did it is kind of the point at which the market makers are like, there's a problem and we don't want this inventory. That's why I had to acquiesce. And I you can calculate it. I don't know how to calculate it. I can just kind of tell. I can kind of tell by how the offers are behaving. Right? So they fell into a hole there. I'm not so sure though that they're just going to reverse. S&P 500 opening up. There was selling on the open, but price is holding fairly well. $15 here seems to be the spot now. We'll forget, so we should start putting these in here, right? There's one here, 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 and here. That volume popping. Well, there's I think what's happening right now is the Treasury has gotten to the point where now it's popping up on people's watch list, and people that normally don't get involved are getting involved. I'm trying to learn market microstructure right now and tell when the maker is bag carrying or not. Well, what I'm looking for is situations where the market maker lets price tick through it without much resistance, right? So do you see they're at 14? They're kind of a little skittish to put the liquidity on there. And when it ticks, there's not very many contracts on it, right? 500. Okay, but the 13 didn't pull when it went offer. So that's kind of suggesting that the market maker is saying, I'll take it here, I'll take it here, and I'll take it here. See, 2000, okay. And it ticked back up. And we say the market maker, but there's like 3 or 4 of these people combined doing this sort of thing. And we kind of got to look at it and be like, okay, what is the market maker using to lean on? And one thing that he's going to lean on is the 6J over here, right? But then the other thing that he's going to lean on is he's just going to be reading the volume. I'm kind of wondering if you don't sell the micro here again on the theory that they're going to make another push. Well, I'm not sure, because the thing that I'm not sure is I kind of feel like that whole move was kind of more of a trade rather than some sort of large meta order. Like, if we come back over here in our chart on our 10-year, okay, then we want to try and track the meta orders, right? That was the meta order that I was relying upon and was expecting to see. I wish that I had gotten out earlier, but at some point we're seeing a meta order the other way. Okay, now if we get a meta order the other way, we should expect, and where was it? Right here? Okay, yeah. So we should expect it to move price more, and it did, right? Now, if we see an equal size meta order going the other way, we should expect it to maybe even go even further. Although I don't think that the book would support that. But it's possible to do that. But so then there's the question is like, okay, what if all of that was stop outs? Then is there another meta order? Is there still somebody filling in meta orders? Is there still another 20, 30,000 to get up that could probably take us up another leg? That's what I'm thinking. It's kind of difficult though, because I'm a little uncertain about what the trade is here is. I mean, I've seen some situations lately with the non-farms where like we were confused, right? Where I was confused rather. But this one I think really takes the cake, because every single piece of news in that was hawkish. An iceberg could be part of the meta order, yeah. Generally speaking, informed traders like to use market orders, though. So that's why I think that cumulative delta is kind of a good proxy to try and track them with. Clearly, though, there was somebody down at 050, right? So some people are talking about that 235,000 were added in revisions to the previous month's numbers, and apparently politicians on both sides are upset about this. I think it has to do with how they categorize people, and that in this particular case, the categorizations made it see more, but I don't know. But here again, like, how do you read any of that news as lower rates, right? I think we should be at 1.6. Okay, so we're getting they're fighting there at 15, right? Somebody forced it to tick and absorb some contracts on the backflow. And got buried. That was an easy one. Oops, I think I screwed up there. There we go. I am seeing steepening, by the way. What if someone used news to better execute a order? That can happen, yeah. Could be like you have this big order and then the news comes out and you still want to sell, then you could go against it or whatever. Or you still want to buy, you could go against it. But usually in that case, though, the person executing it is like calling them up, going like, okay, well, this happened. You don't want to really execute anymore, right? We canceled it for you. What are you saying? Which one are you watch? Suppose a big stupid trader went short while all the informed traders went long. How are you going to deal with that? Well, that's why you're watching the order flow, right? That's what I should have been doing. That's why I really should have gotten out of that trade a lot earlier. Because that's kind of what we were seeing, was it looked like that the informed trading was all short and somebody was holding it. I'm willing to take these. Yeah, didn't got the fill. Yes, holding, yeah. They're not doing too bad in the S&P 500, right? It just keeps chugging along. Up above 4,700 now. Kind of sucks because I really thought that the trade was in the Treasury, and I was so wrong, huh? Couldn't be one of my worst trades. I think that I had everything right. I probably should have given up on it a little bit earlier, but I wouldn't have changed anything other than I wouldn't have tried going long off of all of that, right? Yeah, you gotta scatter your money. But I really feel like the economic framework, was supportive of the interest rates rising, and the Treasury being the one for the good trade. But the Treasury reversed, rather perplexingly, the Treasury reversed, and the S&P 500 was, did real. I mean, I expected the S&P 500 to do okay, but it really trended quite well. It really makes you wonder, right? There is, I think, a high probability here that there is some sort of large buying meta order that is contrary to what the fundamentals are, right? Like, based on the currency flow, probably our best guess should be that the Bank of Japan is coming in and is increasing their treasuries, right? Like, we're going to come back next month when they release the the foreign holdings. We're going to find that the Bank of Japan added a ton here, and that they were probably responsible for like almost all of the decline in rates. And for that matter, I'm not convinced that they're done today. I'm kind of thinking that there might be another run at highs. Decent amounts of volume trading there at 47.05. I guess another thing that we could consider. I keep saying another thing. With the situation that we have here in the Treasury, we may have entered into a situation where the short-term trading, matters more to us than the fundamentals from the jobs report at this point, right? Oh, I don't want to raise my cost basis. I think I want to just try and let this one contract run now. You think the NQ might turn bear here now? Well, they certainly look like they're getting a little bit of a pullback, don't they? You know, I've been considering wanting to take another trade in the micros, but try a short, but I don't think I'm going to. I don't think that there's enough time. I'm very bitterly disappointed, my friends. That one's gonna hurt. Hopefully I don't let it drag me down the whole weekend, but man. There you go. Looks like it is gonna do it. Should have taken it at 5-4. Do we see any changes in the spread off of this? No, we don't. The way the spread's doing this also kind of make me a little suspicious, you know? Okay. It's doing the iceberg level break there at 17. I think in this, yeah, okay. I was going to say, in this kind of a situation, it's pretty likely to play out. They didn't really do anything too crazy at 17.5, so there's probably a few more in it. There you go. 18.5. 19. Maybe not 19. 19 looks like a little more difficult. And where was I thinking about going short? 54, man. Feels bad to miss out. I mean, I took it on the Treasury, right? But I really should have gone in on that one. Because I knew I had a reason to anticipate more orders, not because of the fundamentals, but just because of the situation. It would have been worth a trade. Nah, I think in this situation, I got hit so hard on that first one that I really shouldn't try and do anything else today. We'll have to crawl our way back. That's going to take a week or two to crawl our way back from, probably. Unless this just continues or reverses next week even. I mean, well, let's come back over here. What kind of opportunities are we going to be having in the future? Shall we see? Okay. Oh, that was this week. We want November 7th through the 13th. Okay. Fed's Powell speaks on Monday at online conference how gender influences economic and financial outcomes okay, so that's not likely to actually have much of an effect. Fed's Evans Automotive Supplier Conference in Chicago. Then we get PPI on Tuesday and CPI on Wednesday. Oh, Thursday next week, banks will be closed in observance of Veterans Day. Gotcha. Wow, they came back there quick, didn't they? But they're still buying. There's still a meta order long. I don't know. Somebody's doing something big. I don't think that this move could just be, too many people on it and getting stopped out. Somebody is buying this against the market. Fixed income market knows something about the Chinese. Why would that? Okay. Let's see what Zero Hedges has to say about it. Equity markets are exploding higher again this morning with small caps leading the way following the better than expected payrolls print. At the same time, bonds are aggressively bid with 30 years cashing to 6-week lows. I think he meant to say crashing to 6-week lows. But against this background, stirs are moving more hawkishly post payrolls. Basically saying that they're more hawkish. They're more likely to raise rates sooner, leaving the curve to reflatten. Once again, yep. They say it suggests the market is pricing in a policy error once again. I don't think that trade makes much sense, man. Like you think about that. Okay. I think that the Federal Reserve is going to make a policy error. Okay. What do the non-farms say? Oh, the non-farms say that the economic recovery is going really, really well, and that it looks like we're reflating quite nicely, actually, and that Delta variant didn't really have that much of a depressing effect on us, and that will probably continue to be okay. Oh, yeah, that really increases the chances of that policy error. You know what? That trade don't make sense to me. Why you would take this thing and say, yeah, this is really where we want to buy, where it really makes us think that the probability of that trade is higher. I don't know. Delta who? I don't. You can kind of see that at this point the market makers are like, okay, we're not gonna be holding any short inventory anymore. So your best session since you started? Well, good for you. So let's see here. That's Friday, Thursday, Wednesday. Wednesday was FOMC. But this day, yes. Because every day this week, except for the FOMC, we saw large meta order buying. Flattening. This one doesn't matter. Flattening. I mean, the whole policy error trade, it does seem like that's in line with where it's going, right? That sure is a lot of contracts, though. Like, that's more money. I guess I don't really know how much they would be sizing and if it's the same people and everything, but that amount and over that long of a period of time and everything makes me think that it's not just some hedge fund, you know? Now, what else did we have? This was Friday, right? Friday, Thursday, Wednesday. Okay, what was Wednesday last week? Oops, I need to go back further. Core durable goods orders? Live streams. I have to go back, right? That would be the 27th. Oh, okay. There was an auction that day. Okay, so I'm glad I went through that whole thing. Because remember that we were seeing the more aggressive buying at the auctions, except for the one auction where they weren't, it wasn't special. I forget which one it was. The 20-year, I think it was. The 7-year was the one that was the strongest, right? That's why we moved up on that day. So it was, we moved up on that day. Then the other auction was nothing. And then the Friday was Chicago PMI and consumer sentiment. But I don't think that they moved all, well, they did end up moving pretty high in, so it was initially, it was bearish. And then, so I think that we could really say that this started last Friday. That's very interesting. I'm not quite sure what to make of it. But going back, I really should have, when I started to puke, next time something like that happens, I should really consider flipping around. Because if I'm really getting stopped out of something, I usually, it's usually going to be a strong trend, right? I'm always hesitant about it. I mean, because I'm wrong about something. The market seems to know something I don't, right? I think, though, that I'm still leaning towards the Bank of Japan is buying treasuries this week. I think that's the main driver here. Because it is, like Zero Hedge was pointing out, that the funds futures pricing out probability of rate increases in the future brought their expectations forward. So kind of contradicts what the treasuries are doing. Yeah, no, I had the whole trade was all planned out. I did what I planned on doing, but it did not go well. That's really frustrating when a big trade goes bad. So the problem that I've been having lately is like I'm doing okay on all these tiny little ones, and then I'll make the big bad trade and screw up. Except for the one. There was the one where I did finally catch the short, right? But that was not before I screwed up several times before that. Well, they're having a hard time holding all of that we had there. That might be the end of it. So they're at 15 again. You think that they could reverse now? I can definitely see. So, I mean, you can't really see it here in the Treasury, but you can see there's this area here in the micros that they went through really quickly, right? They may retrace back to, well, to 09. That seems a little bit too far. So maybe they just do here. Consolidate. I need to define better for myself at which point this contradicting order flow is a big enough deal for me to manage it. Because I really had an opportunity to just scratch it, right? And I had order flow, contradictory order flow that would have supported it as well. Stick with Tuesday, Thursday. Well, Fridays have been. I've made screw ups on Fridays for sure in the past. I was kind of wondering. Like, here's the thing: is that my stats have shown in the past that I don't do well on Fridays. Mondays and Fridays tend to be my worst days, and it's like, well, but it's only like that on Friday because I made a bad call. Right. But I've made bad calls on Friday a lot. And so I'm like trying to sort out what is it about Fridays that I've made bad calls on so many times before. I've made really, really good trades on non-farms too, but it seems like I'm missing something there. Like, so then I was thinking, well, maybe it's because there's so much interest over the non-farms that even when you're getting it right, that it's just too crowded of a trade. And that's why I get these inexplicable moves against me. But then here is like a situation where there's really no way in my mind that I can possibly reconcile that report suggesting that rates need to decrease. You know? There's literally no way in my mind. And I'm sitting here like it was a surprise. Like I don't think that one was crowded. I don't know. There was something else is going on in this particular case. Mm-hmm. Why did you make a bad call? No, because the fundamentals were correct, right? The statement, in fact, it really went with me for a while, right? I think so. So there was another mistake, I guess, that I didn't get in there, right? When the move occurred, and we were up at like what? What was my initial? 7. Okay. So we're up here at 7. Okay. And there's not a lot of liquidity in the 10-year. So I know I'm taking a risk, but I'm expecting there to be some, further trend. Okay. So I took it anyways. And I thought at that time that was equal to what was like '09 or something like that in the Treasury. Oh yeah, sorry. I thought that was equivalent to like '07 when it really ended up being '04 half. Like they kind of disconnected for a little bit and then came back, and when it came back, it was like, oh, I bought the high. But like it did go through here, but you can see not very many orders went through above me. I just need to come in and just do the cynical thing on non-farms every time, right? Or trade it in the E-mini, because I think another thing is that it seems like it's the E-mini that's or that it's the Treasury that's the problem in this one, right? It's like the Treasury for some reason doesn't do what it's supposed to sometimes with non-farms, or at least lately. What it's supposed to, what I would expect it to do, right? No, but I think the one change that I will make here is that I'm not going to take big risks on non-farms anymore. So that's the second time it's burned me on this account. If I took those two trades out, I'd be awesome. I'd be doing awesome. So I don't think that the risk justifies it. Or rather, I don't think that it's justified given the risk. I maybe I can take like one contract. Okay, well, I'm going to have to end the stream a little early today because my wife is working and I have to go watch the baby. So I got this new screen. I'll show you. I'm just looking at it and it's like way nicer than I thought it was going to be, because I was like, I just want the cheapest thing I can get. Oh, that's crazy. That's crazy. So I guess you can't really tell then, like the image on it is just a lot more clean and clear than I thought. It's like high resolution. The color is a little off though, like it's a little more contrasty than it is on this screen. Hopefully though I can get it to fit on the teleprompter correctly. It might also, you know what else? It might convince me to try the teleprompter thing again. So I had the teleprompter there, and when I recorded it and everything, I really hated it. But if I could like leave it there all the time, and then I could have me on the teleprompter so that when I am looking at the camera, I am seeing myself. And then I would probably talk into the camera more often. I would think I would like that. I think I'd still would rather record over there, but I can just leave that tripod over there. And hopefully hopefully I figure out what the deal here is with the autofocus and everything, because I thought I had it set up correctly, and then the frame changed, and so I don't know if I bumped the zoom or if the zoom when it's a video versus it's using a different frame when it's a video versus picture or something like that. Well, I was saying that it kind of looks like we've really settled into a really, really strong hole twice now, because we were kind of at 05, and then, well, we had the big rush. We came back, it was 05. Then we had another further excursion, and it also came back to 05 again. Now, before it was pushing below 05 a little bit, but it was still, you could tell that 05 was the area where there was not very much latent liquidity. So there could be a possibility of a decline the other way, but the way that this has been playing out and what we think it is in terms of, a large meta order and everything, I don't think that I could be looking for a reversal, although it is possible. But I think what's going to happen here is my wife is going to be, might as well just end it here, because I think she's going to take the kids to school on her way, and then it'll just be me and the baby. What should I do? Well, I'm just watching the baby. Maybe there's some materials I can read. I could try getting the laptop out and writing some scripts too, but yeah, I think I should do that. Write some scripts. When I have a bad trade like this, it makes me so demotivated about making videos. But I just have to go back and think okay, so why did this happen? Well, there's things that I did, and there's things that the market did. So I can't necessarily control what the market did. I do think that I need to understand what the market has been doing in these situations a little bit better. I think that I need to go back and do a super analysis of Friday. Maybe next Thursday, because we're going to have a bank holiday, and I don't think that there will be very good action. After there's going to be CPI and everything, and then there's going to be the Thursday is going to be dead, and then I don't think that there's going to be too much on the Friday after that. Let me double check here. So maybe we can do that investigation on Thursday. Yeah, Thursday, Friday. Oh, there is consumer sentiment. Yeah, so maybe we can do Thursday, Friday. Yeah, everybody loses. Yes, that's right. But okay, so going back to it, it's there's things that I did and there's things that the market did. So if we just think about the market for a second, okay, there might be something going on Fridays that I don't understand. But I also think that there is something going on, a larger trade that's been going on since last Friday, really, that I don't understand. So part of it is we can chalk it up to I don't understand the market, and that's one, if I don't understand the market, I'm not going to do as well, right? That's the issue with informed trading, okay? But then there's, on my side, things that I did, right? I sized up on that, and I tried taking it on the momentum when the liquidity was light. I don't think that has been working out very well for me. I think I've gotten lucky a few times, but I don't think that that's been working out very well for me. Maybe if I was trading it on the regular treasuries, I could do that, because you could see there on the regular treasuries that I had got a really good trade at one point, right? I only ever got 3 favorable ticks of excursion on the micro, right? So on my part, I need to change that. But then I have to go back and I was okay, well, does that mean you're stupid? You shouldn't make a video? No, because 1, there was the market. That was a big factor, right? 2, the things in the approach that we're doing are still based on empirical, and there's nothing that we've seen in there that kind of suggests that there was a problem with any of that, right? Me was probably a bigger problem today because I could have scratched it, and there was signs that I should have been doing. The order flow was telling me that I was wrong, and I ignored it because I thought, well, it's non-farms, you can see so much more beyond that. But it did end up being a big deal. Maybe it was okay to give it some leeway, but I should have dumped it earlier. Happens when you're tired. I'm not really tired. I don't feel tired today. Block buy at 18, huh? Well, that could be a problem. When you're tired, you're ignoring the market. Well, and I think it's more of a me thing, right? Like, I think that I could have a tendency to get into a trade. And you notice, one of the things that I'm noticing is that there have been a couple of trades lately where I got into it and I started to see signs that it wasn't the right trade, and I just got out before, when they were like great trades. And I like picked the entries and exits really well and stuff like that. But I'm realizing that those are all fast. And what happens is I get in it, and then the longer I'm in it, the more stubborn I become about it, right? So I'm not sure what I need to do about that. Could be one thing that maybe we could do is, if I come over here, what was the timing of the of when I closed at 7:16? Yes, and then coming back over to here. No, I did the right thing. That wouldn't have solved it. I was thinking, well, if it's been 45 minutes and I'm starting to see the meta order going the wrong way after the 45 minutes. But that is where I got out. That's what I did today. That's what clued me in to get out. That was why I was probably like, I probably should have reversed it, huh? No, but I think just being way more risk averse during FOMC is probably going to be enough to fix our current problems, right? Because it's really been too bad. I mean, there was also a spread trade that was really bad, but if we took out the two bad FOMC trades that I've done, then the account would be in a really good spot. So the trading has been good. It's been the mistakes are still killing me. I'm getting like lots of small wins, good win rate, good risk reward, and then a dumb trade will come and ruin it. Well, we shall see what happens next week. Because here's what I think is going to happen next week is, if I can come back over here. Next week we've got PPI and CPI. Oh, they don't have forecasts up for it yet. I think that they're going to forecast something like spot 4 and they're going to get like spot 6. And there's going to be food inflation in particular, food and housing inflation. I don't know. Yeah, I probably should be trying to be a little bit more nimble during the FOMC or during non-farms too, right? Like, I could probably pick up and take a bunch of trades and just take a bunch of small ones instead of going, oh, okay, this is a situation where it trends and I really want it to trend. It's just like I've had so many of those situations where I really had the good trade and I decided to take the profits, and I should have just really let them ride, and I've regretted doing that so many times. But it seems like the ones where it defies me and it's perplexing seems to be much more common, at least lately. Because that's been like 3 or 4 in a row now, FOMCs, where the action was really bizarre, right? Okay, I'm going to get going, guys. What should we put into the day? Treasury short covering rally despite what do we call it? Knockout non-farms. Despite positive non-farms. There's another thing. I wonder. Parting thought for you guys over the weekend. If it's a meta order buying from the Bank of Japan for no real good reason, then we can probably predict when it's going to end based on timing, right? That, they might be done by Friday and that'll be it. And next week it's where rates are going to rise again. Something like that, right? But if it is the market pricing in a policy error, which I just don't see right now, but okay. If it is the market pricing in a policy error, how high are they going to go? How high are they going to go? Makes you wonder, right? Probably though, I'm going to bet you on Monday we'll put money on it, but I'm going to bet you that yields this low is going to be a temporary thing. They're going to have to come back a little bit. Okay, guys. See you next week. Stay profitable, friends.